Yeah, good afternoon, everyone. On behalf of Equirus Securities, I welcome you all to the Q4 FY24 post-earnings conference call of Rolex Rings. On the management side, we have Mr. Manish Madeka, Chairman and Managing Director, Mr. Mihir Madeka, Full-Time Director, and Mr. Hiren Doshi, Chief Financial Officer. So without further ado, I now hand over the floor to Hiren sir for his opening remarks, post which we will have a question and answer session. Over to you, Hiren sir.
Thank you, Arshin. Very good afternoon to all of you. Thank you very much for joining our earnings call for the Q4 as well as for the year ended March 24. We would like to take you through the certain financial numbers. Would like to inform that in Q4 FY2024, that is Jan to March 24, the company has recorded net revenue from operations that includes components and export incentives and scrap sales, which was 316 crore. The same number in last quarter, previous quarter, that is December 23, it was 273 crores. Here in this number, company had a growth of almost 13.6%. Same way, the corresponding year, the same quarter in previous year, it was almost 300 crore. Company is having a growth of somewhere about 5.6% on these numbers for the Q4 of FY24. In terms of EBITDA margin, would like to tell you that March 24 Q4 company has recorded almost 76 crore rupees as an EBITDA, which is 23.8% of our margin, which was 20.6% in the previous quarter, that is December 23 quarter, and the same it was in the previous corresponding year, 65 crore, which is somewhere about 21.6% of EBITDA. In terms of PBT, company has recorded 63 crore rupees for the quarter March 24, which was 50 crores in previous quarter, that is December 23. And previous corresponding year, the same quarter, the company had recorded PBT of 57 crores. Here, would like to tell you that company has a quite positive turn or a positive curve in terms of overall revenue from operations, in terms of EBITDA margin, as well as in terms of PBT margin. Looking to the PAT number, company has declared 24 crore of PAT, which was in previous quarter, December 23, 37 crore, and the previous year, the same quarter, it was 46 crore. Here, would like to inform to the participants that for the March 24, the lower number of PAT, that is because of company has provided specifically one extraordinary item, which is a right of recompense, which is to be payable to the lenders of the company, as company has went to the restructuring of their debt in 2013 with the help of CDR cell, and the lenders have restructured the entire debt of the company. Post repayment of entire debt, company has repaid all the short-term as well as long-term capital debt to the bankers. Now the lenders are entitled to have a right of recompense. The company has assigned this task to certain third-party agencies, which is also working as of now, and the lenders are also working on the same. The best estimate available as on date with the company, and after duly consulting with the particular consultant, company has provided rupees 32 crore as a claim of right of recompense, which is payable to the bank. So that is why the PAT, which is factually, it is 59 odd crore, but because of this 32 crore impact, it has reduced to 24 crore. In terms of revenue bifurcation, the bearing ring segment and auto components almost going on the same line what we had earlier. Auto component business is 46% of our overall revenue operations, and bearing ring is 54%. In terms of exports and domestic, again, having the same range, company is having same kind of growth and pattern in both the segment of the business, that is export domestic. Export is somewhere about 56% and domestic is touching to 44%. Would like to inform the participant as well as to stakeholders that company has seen, particularly in the last quarter, bit turnaround, bit rebound in certain domestic pockets, particularly in auto component business. And the same company has experienced from the European markets, where the new customers are coming for further inquiries, as well as the demand or the lifting of the customers who have recently started the business has grown up and it is gradually picking up. Company is also expecting the same growth, gradual incremental growth in the coming quarters from the European market as well as from the domestic markets. As far as US market is concerned, company is having almost a straight curve as far as the US market is concerned. But company is in dialogue with certain couple of US customers in terms of bearing ring as well as auto components, particularly auto components in hybrid vehicle segment and EV segments. Right of recompense, as I have already mentioned, that company has estimated this thing on the best estimates available as on that. That is 32 crore rupees, which has included in the financials as an exceptional items. In terms of revenue mix, the major chunk as it is there contributed by passenger vehicle, which is 40% almost. The industrial segment is somewhere about 20 to 21%. Commercial vehicle, heavy commercial vehicle, off-highway vehicles, railways, all put together, company is gradually increasing their stack, which is somewhere about 29% of particularly last fiscal. And again, the most importantly, the EV and hybrid segment, where the products of the companies are very well accepted, and particularly in this quarter, the hybrid vehicle OEM has already started lifting certain components from the company. While talking for the overall total revenue from the operations, the company has recorded 1221 crore as the revenue of from operations, along with 15 crore rupees of other income, which consists interest income, then forex restatement, and so on. The same number, if we bifurcate into domestic, it is somewhere about 586 crore, and export is 636 crore. Vis-a-vis FY23, it was 1179 crore, where the export is 652 crore and domestic is 527 crores. Same number, previous fiscals, it's almost 1010 crore. Then prior to that, it was 616 crore, particularly in FY21. Company is having growth. No doubt the growth in this particular fiscal compared to FY23 is a marginal, which is somewhere about 4%. But as you people are very much aware that the top line or the revenue of the business is based on the fluctuation of the commodity pricing. Compared to previous year, the commodity pricing, that is alloy steel bars, what company is mainly using, is having a dip, or rather the downward of almost 6 to 7%. In terms of quantum, that is why the company is having a growth of somewhere about 8 to 9% as far as overall sales is concerned. So in numbers, in revenue numbers, it might be 4%, but quantum growth, it is somewhere about 8%. Same way in EBITDA, would like to tell you that for last almost 3 years, company is having the same kind of curve, which is ranging 23% of EBITDA. In last fiscal, that is FY24, company is having an EBITDA of 22.4%, which may be say 0.5% lower compared to the previous years. Here, would like to tell that because of certain uncontrollable parameters like ocean freight, earlier it was on higher side, then again the Red Sea factor, etc. It has happened, and that is mainly affected to Europe and US market. European business has again picking up in the last quarter, wherein we are supposed to sail our containers with the high cost freight, and that has impacted a bit. But a company is expecting the same to be regularized maybe in this quarter. Again, it started coming down, and the company will be having the same kind of EBITDA what it was there in the previous fiscal also.
It will continue the negative content.
Yes, and if we are going to have any kind of abnormal adverse impact over there or an incremental ocean freight, definitely we can explore the same with our customers. In past, they have also shared the same additional or incremental ocean freight because of certain geopolitical reasons. In terms of profit before tax, as I was mentioning, that particularly in FY24, March 24 quarter, we have provided 32 crore rupees for this ROR matter. That's why my PBT, PAT has gone down to 156 crore. In terms of PBT, it is 242 crore, which was in FY23, almost 243 crores. Operating cash flow, company is having sound operating cash flow. In terms of business, company has generated almost 221 crore rupees of operating cash flow. Out of that cash flow, company has incurred somewhere about 55 crore rupees in capex mainly into the solar completion and certain equipments for the advanced value added processes. As already informed, that company is net negative debt company. Company has a good amount of surplus of funds, and company has parked their funds into short-term investments, wherein the company is getting a good rate of return as far as the normal debt market and security market is concerned. Company is 100% paid off its entire debt. Only the matter which is pending as far as that is concerned, that is right of recompense. We expect the same to be completed in this fiscal because it has initiated with the bankers. Return on equity in March 23, it was 27%. Again, it has gone down to 17%. The main reason is to considering the 32 crore rupees of provision of extraordinary item. These are the detailed numbers, what we have communicated, what we have already disclosed over the stock exchange in terms of profit, in terms of operating numbers, as well as my balance sheet numbers. So without going into individual numbers in detail, I would like to open the session for Q&A. Company and management would happy to answer your concerns.
Thank you, sir, for those opening remarks. We'll open the floor for question and answer session. Anyone who wants to ask a question can use the raise your hand option. Once you are done asking your question, please use the lower your hand option. We'll wait for a couple of minutes for the question queue to assemble. The first question is from Jason. Please unmute your line and ask your question.
Hello.
Yes, Mr. Jason.
Yes. Hello, sir. Am I audible?
Yes.
Okay, sir. So my first question, just wanted to understand, in terms of the auto components and bearings both, just wanted to understand that are we introducing certain new products for the EV or hybrid segments? And if so, for these new products, how much will realizations increase? And how much margin profile will be for these new products?
See, for the hybrid and EV vehicles, we are capable to produce mainly the certain certain transmission parts, few chassis parts, and wheel hub parts, wherein various or critical operations are to be taken out. So definitely where the value-added processes or the critical operations are there, the margins would be better compared to my traditional bearing ring or a traditional auto component business. Company is getting good response what they have initially supplied to the overseas customer, who in turn supply to OEM, and the successfully trial and run on the road. Definitely there in this kind of business, company is getting couple of percentage better margin compared to my other low value added or a typical product businesses.
The margins are a couple of percentage higher than our existing one.
Yes.
Sure. And sir, in terms of when you look at the numbers, annual numbers, a certain when I do the back of envelope calculations, we see that bearing rings this year, overall I'm talking about, revenue growth has been around 8%, and auto components has roughly been flat actually for the year. So sir, just wanted to know, going ahead 25, 26, would you, if any guidance you would want to give for both of these segments?
Sir, first of all, the numbers what you might have compared with the fiscal 23 versus fiscal 24.
That's right, sir. Yes.
As I was mentioning that in these numbers, the commodity pricing is a vital factor. So if you compare the absolute number only, that may not give you the correct picture. There is definitely growth in the bearing auto component business also, that is from overseas and even in domestic market. Let me tell you a couple of domestic market customers who were very less in the last fiscal. Maybe they have started their business somewhere in December 22 or something like that. And for that, from there to 6 months, it is very small quantum what they have lifted. But in this current fiscal, that is FY24, the reporting fiscal, there they have completely come up with the very increased demand, and company has supplied. So there is a growth in the auto component business also, in domestic as well as auto overseas. Particularly in last quarter, as I was mentioning, that we are seeing some kind of turnaround, some kind of, reverse turn in European segments. And there, one of our main customer for auto components, they have significantly increased their volume.
Okay. So any guidance? You generally do for 25 or 26, would you want to give any guidance for this? For both the segments,
For the overall business, for the overall what management is envisaging is what we can say a mid-teen growth kind of thing, that is somewhere about 14 to 16% over the numbers of fiscal 24.
Sure, sir. And sir, just would want to know, in terms of client traction, how are you seeing US, Europe remain key markets for us? And earlier in the year, you did mention that, Europe was weak, right? Europe was seeing slowdown. And so how do you see the situation right now? And just wanted to, if you could speak something about the client traction, and also you could, I understand 56% is exports for us and 44% is domestic. So just if you could break it up into US, Europe and India, that your sales contribution.
See, first of all, our customers, they are basically global multinationals. They have presence in US as well as in European market both. They have different plants at the different countries. So once if we start with one customer, say for example in US, definitely we would be we will be opening our doors for the other plants at Europe for the same customer. So we are getting inquiries from there also, but it is not pre-decided. Let me tell you, though the European market was weak for the last 1.5 years or something like that. But let me tell you, in this 1.5 years, the maximum new customers what we have developed, what we got an inquiry, that is from the European territory only. So there we have turned around, and now those business, those lifting have already started. At the same time, in US, though we were majority selling our auto component business over there, in US we have developed couple of bearing ring customers also, mainly into industrial bearing and so on. So there is, it's not a fixed kind of trend or a traction in a particular territory. We were not having much of the growth in domestic market as far as the auto component business is concerned. But for last 1 year, for last almost 15 months, we have developed couple of new customers in domestic for auto components, which they have started almost contributing to 3 to 5% of my monthly revenue.
Sure, sir. So in terms of percentage, how much would this be? US, Europe, and domestic? In terms of revenue?
In terms of revenue, as I was telling that 46% that is there from domestic market,
right?
And out of that 56, or if I'll just take that 56 number as an 100%, then there 75% is from the US and 25% is from the European market. And we expect that European number would be increasing in down the line 15 to 18 months.
Okay, sir. So that's very heartening to know that Europe is seeing a turnaround and you would be beneficiaries of this. Sir, just wanted to know utilizations level, sir, for our plant. What is that currently?
Currently, we are, I can say couple of percentage of utilization, it is increasing. But again, we are in the range of 63 to 66% of my overall capacity.
Jason, could you please come back in the queue as there are others waiting for the turn?
Sure.
We have our next question from Abhishek, sir. Please unmute your and ask your question.
Hi, sir. Am I audible?
Yeah, Abhishek.
Hi, sir. Thanks for the opportunity. Sir, just a couple of things in terms of Europe you spoke about is about 25% of the exports. What was the peak number, sir?
It was, say, of exports, it was maybe before 2 years back, it was 35% of my total exports.
Okay, so that number has come down by good 25% over the last year.
More than that, you can say, yes.
And you think with recovery coming back, because the way it has happened, sir, you have one new clients, but the older clients have obviously, lowered their business. So in next couple of years, you believe whatever earlier number in Europe that you were doing, you will be able to grow on that based on the new wins that you have seen in last couple of years?
Yes, definitely. Because the new customer, the volume of the new customer and the number of plants what they have proposed and already they have nominated the same.
Thank you.
Definitely we'll be having, almost back to that number what we had before 1.5, 2 years back. And I think somebody is, definitely, my existing customers with whom I am dealing business for say more than a decade or something, it has gone down. But again, we expect that to now pick up in the coming quarters to some extent, not to fully. The contribution from the new customer will definitely help me or take me to the back what we had from the European market share.
Okay, that's very helpful, sir. Sir, if you can also just broadly indicate what are the new wins that we have seen in last 6 to 12 months?
Sir, new win in terms of what?
In terms of new, have we got new orders or in terms of bearing or auto components from any of the major clients? How should we look at it? Because that is something which will drive growth for you. So that is something you are trying to understand.
Recently, from my European customer, just maybe almost a month back only, we got couple of nomination, couple of program awarded. It takes 1 year. And no doubt that will be executed, operated down the line 12 to 14 months, or effectively in the next fiscal. But that is again from, as I told you, from the European customer. Prior to that, we were we have been awarded various programs from the other customers who have just deferred their program because of big situation at overseas. Now they have started lifting, or rather the volume what they have started initially was on lower side. Again, that volume has picked up, and gradually it is ramping up.
Okay. Sir, one last question is, the one last question is that, in terms of, we are also seeing a lot of the domestic bearing manufacturer companies are adding a lot of capacity. Some of them are likely to commission in next 6 to 8 months. So how should one look at orders coming in from there? Any indications, new products, any indication there will be helpful. Thanks.
So as you rightly say, that domestic customers are into expansion mode, and they are setting up new facilities with these things. See, all the main domestic players as far as bearing manufacturers are concerned, they are into our customer portfolio. But we are able to supply a particular range of the product in terms of bearing ring. In my addressable segment, I am the preferred supplier for all these Indian leading bearing manufacturers are there. So definitely in my addressable segment, in the product range, what I am capable to produce, I'll be getting the maximum share from my existing customers who are there, or rather who are expanding this thing. So, and we already developed few components, few new kind of bearing rings for the domestic customers, which may take again 6 to 8 months from now to operationalize.
This is with discount.
Okay, sir. That is very helpful. I have few more questions. I'll come back in the queue. Thank you so much.
Yeah, we have our next question from Nikhil. Please unmute your line and ask your question.
Yeah, am I audible?
Yes, you're audible.
Yeah. Thanks for taking the question. Hiren sir, just wanted to understand, within your export mix, can you help us understand what is the breakdown between, say, auto and bearing rings, and maybe similar breakup for domestic revenues?
See, if you say for last fiscal, my overall export was somewhere about 640 crores. And in this 640 crores, you can say 60% business is from the auto components and 40% from the bearing ring business. While coming to the domestic market, we had a total of somewhere about 50 crore rupees of bearing ring business, wherein almost 65% business is from the domestic and remaining from the export market. Auto component market.
Okay, got it. And then within exports, maybe if you can just give us some color that where are you seeing growth coming from? Is it more from auto components and bearing ring? And how does this mix maybe move going forward?
Sir, we have, growth. It's not a fixed trajectory that in this particular year we have growth of say 15-20% for both the segment or something like that. It depends on the territory and the new customer, what kind of product, how much time it will take to validate, to develop this thing. But let me tell you, in domestic market, in last 1.5 year, we have developed 2 auto components customer, which are already contributing somewhere about 5 to 6% of my overall revenue. In terms of bearing ring also, we have developed 1 new customer in domestic market, as well as my existing customers have added certain products. Same story as far as overseas market is concerned. We have developed many, or rather you can say 3 to 4 new customer in European market. For majority of them are for auto component of business. Yes. And even in the US market, we have been, as I was mentioning, we have been nominated for the certain project having mixture of this one auto component and bearing ring both.
So out of those 3-4 customers in American market, few projects are going to be start within this year, by this year end, and the others will be by next year. We have already been nominated. Yeah.
Got it.
Simple process is going on. Very simple.
Okay, thank you. And just lastly, one housekeeping question. I think if I look at the depreciation number, that has jumped up from, say, broadly 7 odd crores in 3Q to 12 odd crores. Just if you could just help us understand that number, and how should we think about depreciation going forward? What is the capex number for FY24? If you could help us with that.
That depreciation amount has increased mainly because of the capex of, or rather the capitalization of my solar plant of 11.5 megawatt, which was capitalized in the month of Jan 24. So that has been added. Apart from that, we have redesigned, or we have reworked the residual life of the equipments as well as the depreciation rate. So it has a bit increased my depreciation in this particular year. Again, it would be the same kind of number in the next year, because the 11.5 megawatt solar, it was just capitalized in Jan 24. So in the next year, it would be a full year depreciation would be.
Got it. And capex budget for FY24?
For
FY25, sir.
25, we are looking for equipments as well as maybe for certain other power conventional equipments also, power conservation. They're both put together. We have planned to invest somewhere about 45 to 60 crore rupees.
Got it. Thank you.
We have our next question from Jason. Please unmute your line and ask your question.
Thanks for taking my question again. Thank you. Sir, my question was on the right of recompense charges. Now, I understand that there was a CDR, and now you're asked, basically you applied for a waiver for this ROR charges, which will give you more freedom from the lenders and various capital management. So just wanted to know, sir, is this a one-time charge, or is it going to be recurring?
No, this is one time only. As I was mentioning that we have paid off all the entire debt to all the lenders. Now this is the ROR matter which is only to be resolved and paid it off. Once we paid off this claim, then company would be completely free with all the assets what has been mortgaged or hypothecated to the bank. Everything will be released, and company would not be having any kind of finance cost unless and until we may go for some kind of borrowings. Otherwise, it is a one-time only.
So it's a one-time cost, and sir, if this is done, then sir, what are the advantages of this? If you could just elaborate on what are the advantages?
As of now, I'm supposed to have banking with my current lenders also. Later on, I may approach other bankers for getting better services, for getting services maybe at some relaxed rate or at a competitive rate, and we will be getting some kind of technological benefit compared to my existing lenders and with the new lenders, because of my almost 60% is overseas business is concerned. Apart from that, these lenders have put certain covenants for my restructuring the capital, for distribution of profits, and all these withdrawals will move it off.
Okay. Sure, sir. So that's good. And sir, my next question, just wanted to understand, so overall at a global level, we are seeing increased Chinese competition in different sectors. But, and of course, the Chinese are big in terms of manufacturing as well. So, sir, just wanted to know, when you look at your clients, are you seeing an increased intensity of competition from the Chinese? Of course, there's a China Plus One, which benefits Indian players like you. So just wanted some color on how you are viewing Chinese competition. Has the competition intensity increased? How you're seeing this thing in the market?
Yeah, I would like to request Mr. Mehir Madeka.
Yeah, see, we are not at all worried about China, okay,
Yeah.
because see, the biggest benefit is our geopolitical stability in our country, where so all our customers and all overseas companies like American companies or a European company, they are not at all now comfortable with China. They are more comfortable with India, and the pricing and everything, we are at par with them now. And if you see the logistic, okay, so China is on the other direction, whereas Europe and America is in the totally a different direction. So their logistic cost is higher than us. So definitely we are not at all worried with China.
And there was one news, I don't know whether it is true or not, but it was in
America
that
Biden is putting increasing the duty in China.
Right. Okay. Sure.
It is a newspaper news, so we are not sure, but we heard that.
And in fact, we are growing in American market also as well. It's like European market, we are growing in American.
There are many projects which we are discussing with our customer. These are the running their project, means existing project. Usually they do not switch over to any other supplier.
One of the very big project, okay, that at present they are buying through China. Now they are switching over to us.
Okay, sure.
Verbally they have nominated us. Now we are waiting for the paper, email.
Okay. So we are seeing good traction, and there is a clear, mandate from the developed economies to shift away from China. So that augurs well for us.
We have to increase our efficiency. We have a lot of projects in pipeline, but we have to increase our efficiency.
And one of the big advantage in our company is that we are moving very fastly with this green energy. Now everybody is looking at that aspects also.
ESG and sustainability, and we are very much ahead in that process. The ESG we started from 2003, but now European and American customers are insisting to get more and more renewable energy and biogas. Recently, we have installed one plant from where we get the gas for cooking from the waste of the
kitchen waste.
Okay.
So
sir, you are focusing
on this year in current quarter. This our new 11.5 megawatt solar plant has already started. So we will be getting the revenue from solar also.
Okay. And sir, so even going ahead, you will be looking at more renewable energy investments.
Yes, definitely. Because, nowadays European customers, they are insisting for the more carbon emission, and they have given us certain targets. So, and we always believe to just, overcome those targets as early as possible, and it will be benefited for overseas as well as domestic business both.
Sure, sir. And sir, just lastly, wanted to ask you, sir, last quarter you had said that there was some issue, a client-specific issue, wherein the revenue dipped because he had taken more, he had taken more shipment in Q2, and you were seeing some weakness on the industrial side of things. Sir, now with elections taking place, and of course we are yet to see how the mandate shapes up. But sir, just wanted to know how was the industrial side looking for you in terms of demand? Have those issues kind of smoothened out, and are you seeing a good smooth trajectory ahead?
Yes, as it was told earlier also, it was a very kind of phase or a scenario. Now, particularly that customer in last quarter, that is March 24, again it went back to the same level or generally what monthly average they had, and we are getting even for this current year, that is say from this one April and May 24. We are getting the same kind of level, or it has already been smoothly rather at the back to the level.
Sure, sir. Sure. Okay, that's all from me, sir. Thank you, sir.
We have our next question from Nikhil. Please unmute your line and ask your question.
Yeah, thanks for taking my follow-up question. So just I think you spoke about the opportunities on the US side. Can you just maybe highlight some incremental order wins that you're seeing in US, either on bearing rings or automotives component side? And also, would it be possible to maybe give us some sense on, say, the order book or something like that? Because I mean, just to understand us how the revenue scale up can happen over the next maybe 2 to 3 years.
See, as we mentioned, Mr. Mihir also informed that we have been nominated 2 or 3 projects in US as well as in European market. And now the process related to that has been initiated. So it will take almost, 9 to 15 months to get the final SOP started. And the overall project, what we have been nominated, their value is in the range of 225 to 300 crores, but it will ramp up gradually
into a year
in a couple of years spans from the date of SOP. So whatever the new customer we got an order or award, it would be effectively started in fiscal 26 with an volume of, you can say, 30% of their peak volume, something like that. Apart from that, the new business what we have already started in last 4 to 6 months, which is at a small which is ramping in the coming quarters, definitely that will come to current fiscal as well as in next fiscal. In next fiscal they are almost at the peak level of their order book. So we will be getting these kind of programs wherein the first year it is somewhere about 25-30% of their overall program. Then in next year it may go up to 75% and later on in the third year. Broadly, what I can indicate for this thing, not for the fiscal 25, but for the fiscal 26 or so, company is having definitely 18 to 20% growth on YOY numbers. Looking to the current parameters, looking to the current situation and the current estimated planning given by our customers.
Okay, all right, thank you.
Yeah, we have our next question from Abir. Please unmute your line and ask your question. Yeah, so the participant dropped off. So that was the last question for the day. I hand over the floor to Hiren sir for any closing remarks.
Thank you very much for all the participants to spare their valuable time for the intakes for the quarter ended March 24 as well as the fiscal 24. On behalf of management, I would like to acknowledge the support from all the stakeholders, even our bankers, lenders, and the suppliers of the company. Above all, the customers of the esteemed customers of our company. Once again, thank you very much, Equirus, also to arrange this earning call. Thank you very much.
Thank you. On behalf of Equirus Securities, we conclude the call. Thank you.